Hey guys, so today's Sunday, the 24th of April, and I'm just following up from a video I posted yesterday, just my usual weekly kind of wrap up or review, I guess. And I did talk a little bit about the Aussie dollar. Now, after I uploaded that, I had a look again I drilled down to a bit more detail as I usually do, and then I had a look and I thought, there's something else that's happening inside the lower time frames, and I thought that it's important to know, because if you're planning to take the trade based on what I said yesterday, which you can still do, there's also something else that's important to note. Um, so, but I thought, well, if I'm going to do that, I might as well kind of explain to you how I walk through and from higher time frame to lower time frame. So kind of like a training lesson, I guess. But there is something else happening in between here that generally doesn't always happen, but it does happen. It's something that it usually hits traders quite a lot, because it's one of those. I'll explain later what I'm talking about, but I'll kind of while I'm doing that, I'll kind of walk you through the process that I use to evaluate a trade, right? A chart, or basically reading a chart and trying to understand what it's doing, what it's showing you. Okay, so the process I use, and not again, like I said, I'm not going to get into specific details, because it will just take far too long. I'm trying to keep this as short as I can. So everything I explain here will be pretty much at a very high level. I might go into some detail on a few things, but majority of the time I'll try and stay away from that. So, one of the things I do on every weekend or during the week, whatever, is I run through this process called a process that I learned through a company called Trade Empowered, which is called the IPDE, which is basically identify, predict, decide, and execute. Okay, so just to put it up here, so it's IPDE, which is identify, predict, decide, and execute. All right, very simple, nothing complicated about that. So let me just change the color. Okay, so a bit bigger there. Okay, so that's the process I usually go through. Okay, it's really simple. Basically, identify is basically from the higher time frame down to the lower time frame. We want to identify what the market is doing, at overall, what is the general direction of the market, right? We usually do that in the higher time frames, right? The lower time frames, we use that for more, trading signals and entry signals and so forth. But if you're looking at swing trading, if you're a swing trader, then you'll be looking at the higher time frames. Okay. Day trader, your higher time frame could probably be like the 1 hour or the 15 minute, right? Depends. Right? But swing trading, we're looking at a bit of a higher time frame. So basically, what it means is, okay, so what are we identifying? We're identifying what the market is doing. Right? Is the market bullish or bearish, or is it in consolidation? Right? Again, I won't get into how you determine exactly what's bullish or bearish, but you're basically determining direction based on the price action. But based on this, you can already tell that the general direction is bearish, right? But there is a potential trend change, right? Without getting into detail again, we've got basically markets going down, lower highs, lower lows, and then as we've come down to put in this low here, this pivot low here, we've come back up. We've broken this structure level, which indicates that we might see a potential trend change, and we're kind of at this level now, and we're expected to see some kind of pullback, right? So again, without getting into details, that's the situation at the moment. Based on a daily time frame, the market is generally still in a bearish direction, but there is a potential trend change. Okay. And that's what identify is really at a high level, right? And then what we do is we go through this next bit, which is predict, which is saying, well, based on where the market is right as it is, and based on what we know the direction of the market is, and what, if there's a trend change or not, where is the market likely to go, right? Basically predicting where the market is likely to go and where to, right? So if it's going to go down, then where do we think it's going to go down, right? If it goes up, same thing, right? So based on my prediction, we're going to say that, based on this price action, I believe that the market's going to do an outside return, which is basically a retracement down to the next support level, right? That's my prediction based on what I see, okay? And when you go through this analysis, it's not supposed to be full-on hardcore. You're not supposed to spend too much time on it. It's really just, you just want to get an idea of the overall market direction. And then, because there's just way too many currency pairs to look at, unless you only got like one or two pairs you trade. But overall, there's just far too many to go through in detail, right? So that's predict, right? So predicting is like, okay, so based on that, where is the market going to go? And, where is the likely levels that would provide a good entry, right? So one thing I forgot to mention before that was, once you identify it and you predict where the market's going to go, you kind of got to determine how you're going to trade this, right? Are you looking for shorting opportunities, or are you looking for buying opportunities? Because that's going to determine what levels you're going to be looking at for an entry, and then your stops and your targets, and that will determine your risk to reward, right? Because at the end of the day, the main thing you want to know is you need to know. Basically, you need to create yourself, build a case for entry, right? And secondly, you need to create an edge, right? An edge over the market. And an edge basically is just, knowing what your risk to reward is. I mean, firstly knowing, is the market likely to go, where is the market likely to go, right? Based on its current, where it currently stands. And then secondly, what is the risk to reward, right? That's all you need to know. So based on that, then I'm just saying rough guess, I'm going to look for an entry around here. If I look for an entry around here, then I know that my stops will need to go somewhere below structure, right? And I know that my targets would be initially at this first structure level here, right? And then based on that, you work out your risk to reward. So that's your predict bit, right? And you decide is basically just saying what I just kind of covered just then, which is based on that level there, is it worth the trade? Do I wait for the market to go down further, right? If my risk to reward is not good, do I wait for the market to go down further, or what do I do, right? And you do the same thing if the market is to head up, right? Do the same case scenario. You basically use a bunch of if-then statements to say, if the market does this, then and this condition is met and that condition is met, then I will enter the trade, right? So that's decide. Again, you can get into more detail around that, like you can get to specific candlestick patterns and all that kind of stuff, but I won't get into that. And then execute is pretty much at the time when the market does move down and fulfill all your conditions, it's a matter of just executing the trade. So it's very easy. Easier said than done, though, because most people will tend to let emotions, determine if they're going to enter the trade or not, which is always a bad mistake. But, if you've done your back testing, right, using historical data, because that's all you've got, you don't have anything else to test with, and you use that and you test your strategy or your setups, and if over a given period of time, if it's proven to be return a profit, right, then and you've got your numbers, you've got your stats, you've got, you might be getting 60% winners, 40% losses, whatever the case may be, then you know that 60% of the time, if you're entering that exact same setup, then you should technically be overall in profit, right, over a given period of time, which is really good, right? So that's where it's like, if these conditions are met, you enter the trade regardless, right? It doesn't matter what it is, you enter the trade. Unless you have specific rules of engagement in there to say, well, for exceptions or whatever it is. Whatever your rules are, it's all going to be dependent on your rules, okay? Okay, so that's the process I follow, right? So yesterday when I showed you the video, that's the kind of process I stepped through, but I really only did it on the weekly and daily time frame. I might have touched on the 4 hour, but I didn't. So and you know, sometimes you might miss out on key details, but you just don't have time to go through. You know, I'm trying to keep these videos short, so yeah. But when I spoke about the video yesterday, I said that we might, you know, we're seeing this reversal here, right? We're waiting for confirmation. We're waiting for the market to come back up and, you know, trade within a certain range, and then we can look for an entry in the lower time frame. And after that, I did that. So if you remember, we went down to the 4 hour. Let me see. Where are we? 4 hour, where are we? Need to actually, yeah, there we go. Change the dive series 240. 50 days, I guess. Okay, so we're looking at this little bit here, right? And I said to you that we'll wait for the market to come back up. Now, based on where we're at now, I don't know if the market's going to reverse from here and go back up, right? It could go down a little bit further. I don't know, right? It's going to be dependent on a number of things. We can do analysis on where it's going to go down to look for an entry, because there is an opportunity to buy long as well. It's not just a shorting opportunity there. It depends what you're doing. So that's why I said at the start, you need to determine what direction you're going to be trading in. If on the daily time frame you're looking for shorting opportunities, then that's okay. And then on the lower time frame, sort of 1 hour, you might be looking for, you know, long opportunities, right? It just depends, as long as you're clear on what you're doing, right? But let's just like quickly just assume that we're going to see a reversal here from here, right? Now I'm just using an example. We're going to see one from here. Then what can we look for? Like, we look for particular signals on, you know, if the market does reverse, where is it likely to going to provide us a good entry, right? And I see there's nothing on the 4 hour right now that I can see that's going to tell me, okay, well, there's a pattern that I'm looking at. So what I do is I just go down again to another time frame, right? So that's that there. So we'll get down to 1 hour. And then you can see already, right, as soon as I go down to 1 hour, I can already see that we've got a potential double bottom, right? So we've got this candle here, right? So if we get another candle on Monday or Tuesday, whatever it is, another one that closes to give us a double bottom, right? Then that might give us, that might be a reversal pattern. We might see the price move back up. Question is, where is it going to go to give us an entry signal, right? Because we're looking for an entry on the retrace, right? Or we're looking for some kind of double top, all right? Now, there's different ways to play this again. You know, some people might have, you might have your rules might be for counter trend trades, which is what this is, right? You're only looking for double tops, right? You know, and even then you might have your own rules around that, but basically I look for whatever the market gives me, whatever signals the market gives me, I will consider them. So let's go with the first option. If you're looking for the double top, right, you're looking for the market, right, to kind of, you know, however it gets there, you're looking for a close on the daily, right? If we go back to the daily chart, shit, where are we? I haven't used NinjaTrader in a while, so no, daily. Okay, so you're looking at the daily, right? Because that's the high. We want to look for the higher time frame one. You're looking for the market to kind of come back up to this level here, and put a close that's pretty much equal to that. Again, I won't go through the rules, but you're looking for a double top, right? Because generally, you know, 50-60% of the time, when it closes, it gives it a double top. The next candle or set of candles will be going down, all right? That's generally what the idea around that. So that's the first option you take. You wait for that top, right? Now, what if the market doesn't get there, right? Or what if it does get there, but it doesn't fill your order, right? Your order might be, you know, behind, you know, hundreds of orders, right? Then you essentially could potentially miss out on the trade, right? So another option that you can use, right? Another entry signal you can look for is what I call based on what I see here, is the cipher pattern, right? So the cipher pattern is an advanced pattern, and you probably seen me draw some of this stuff in the past, where you're looking for a particular pattern that uses Fibonacci ratio levels, all right? Damn it. Okay, so the hell? That's very unusual. Fibonacci extension. There we go. Swing low, swing high. What's that? That like this. So I can see the measurements. There we go. All right, so, and this is what, I'm gonna have to draw this in slowly, sorry. Yeah, I'm just drawing this roughly as best I can. Okay, so you're looking for the market to do something like this. So if the market comes up to this level, which is the 78.6% fib level, which is the price being a 78,055, I think, then you'd enter short, right? These are the cipher pattern rules. Now you can, depending on what your rules are again, some people have very specific rules around the cipher. Some people just use the standard rules, right? Based on the rules, it doesn't mean you have to enter there. You can look for an entry further up, right? It just depends again, right? As long as your rules are clear, right? So anywhere between here is still valid for an entry, as long as it doesn't close above this level here, okay? So that's already a good level to look for a short, okay? And it also gives you an opportunity to be ahead of the market. So a lot of people will be placing orders up here. You're getting ahead of this. You're prepared to risk have an initial loss, in the hope that you're already in the market for it when it does move, okay? So where your stops going to go, right? Next thing is going to be placing stops, right? So your stops will be placed probably about 10 pips above, 10, 20 pips above that previous high there. So you're looking at initial risk of 20 to 30 pips, and that's okay on the daily time frame. So it's your risk, and your initial profit would be basically using a Fibonacci retracement, which is using the 38% and the 61%. All right. So that's that there. Now, what I want to now, like I said, after yesterday, I was looking around. I was having a look, and I realized that there might be a possibility that we might see the markets, rally back up, right? And I'll show you what I mean by that. Damn it. Okay, so that's the first. And I was posting this on TradingView, which is an online kind of collaborative kind of website where you can post charts and stuff. And I realized that, I might be giving out some information that might hurt people, because although the trade is still viable, if you place really tight stops, you're going to get hit. So there's a chance you'll get hit. So what I suggested was that people, if they're taking the soft pattern, take profits at target 1, target 2. Because what people are thinking is, they're looking based on, if you look at the daily again, right? Based on the daily, you're looking at the daily, you're saying to yourself, if this fulfills, then we're going to see a big move down. We're not going to see like a little small bit. It's going to be a big move down. So people would have been using that cipher as an entry signal, as a signal to enter the market, right? And some would probably take profit, or most will probably hold it and go all the way down. Now, what I think is going to happen is, and I've seen this many times in the market, where institutions will tend to move the market one level above what was originally intended, okay? It happens quite regularly these days. I don't know why, but it just does. So So yeah, so you got to be careful because a lot of people will have their stops set really tight, and then find that all of a sudden the market's just whipped against them, and then hit their stops, and then reversed and continued back down. All right, so that's what generally happens because people will place their stops, like say for example, they'll place them really tight here, right, and then the market will kind of go up and then it will go down, right, and it might zigzag around for a little bit. It might zigzag down for a little bit and do its thing like this and go down, and all of a sudden it'll just go back up, hit the stops, right, continue maybe a little bit up, a little bit more up, and then roll over and go all the way down, right. And these people that got hit by this, they're just like shattered, right. It's happened many times. It happens to me as well. So what I think might happen is you be careful, because unless the downside for the Aussie dollar would only be confirmed if the market breaks below that structure level, right, initially, right, and this is on the 1 hour, right, so I have to go to the daily time frame to show you, yeah. So that's the date. So it needs to break at least the 76 high 76 nines level. Now, if I go to the daily, because you want to really look at the daily to get a kind of more accurate, not more accurate, but more of a higher level, higher time frame kind of confirmation. So if I zoom that out a bit, then yeah, so you're looking for it to break that level, right? That's your first signal, right? The second minor signal for a break below would probably be around this level here, right? You've got some support and resistance as well. I'm going to mark that as being, that's probably a pretty important level actually. But that will be your line in the sand pretty much to say, yep, this is, once it crosses and closes below there, I'm definitely going short, okay? So in the meantime, the market could go up and down whatever it likes, right, within this range, right? Provided that, if it crosses below here, then it ain't a bear signal. Which is the reason why I think, and I've seen this many times, and I still keep making the mistake sometimes, but yeah. So we might see the market move down, and then it's going to whip back up and kind of go after this Fibonacci level here, which is a potential shorting opportunity. Okay, so we might see the market do another move up and fake the market out before it does the real move it originally intended to do. So if I get rid of all these drawings there, sorry, bear with me. Oh shit. The drawing tools are really like flimsy and stuff. Oh, Jesus. I'm trying to make this as short as I can, but yeah. But you can see, like, there's a fair bit of work when you go into the 1 hour kind of analysis. There's quite a bit to look at. It gets a little bit confusing sometimes too. So I'll do a fib inversion, see if I can get any numbers here. Right, so already I've got a third. That's my initial. That's a level that I'm interested in. Hold on. Damn it. Okay, so that's a level there. That's a good level. This is potential level. Notch extension. Far out. Okay. Okay, sorry. This little thing's a bit flimsy. Okay, So I've got two levels here, right? And I'll kind of zoom into the 4 hour and I'll show you what I'm talking about. It's a technique, the Fibonacci inversion. I won't explain what, I think I did a video on this previously, but you can have a look later to get more of an idea. So based on this, I've got two levels that are of interest, right? So the first level is being this level as a potential level the market is going to head up to before we see the real reversal, okay? So just you probably want to mark that in just in case. But that's a level on mine initially. So that's the first level, which is the 78,679s, and then you got another level here, which is I don't think you will reach it, but you know I've put it in there anyway because it is a potential level, which is the 79,259. Okay. It's just to not level to I. Like I'm not saying it's going to hit that or not. So that's that there. So yeah. Again, if it gets there, there's two options you can play this, right? If it goes back up there, then you can set a limit order and just wait for it to get there and hit it and then come back down. Or you can kind of wait for it to go back up there and then kind of play it conservatively and look for kind of an entry signal, whether it's a candlestick pattern or doji or something like that, to give you a confirmation that it's going to go down, right? It's up to you, right? But just keep an eye on that. This is still a viable trade, the one I showed you before, the one with the cipher pattern. There's no reason why you still can't trade that. Like if it goes up there, get into a short position, take targets profit 1 and 2, target 1 and 2. And then see what it does, right? It could roll over from there, or it could go back up, right? But the other way you can play the cipher is maybe just take one target, right, and then leave half position open, right? Or play half position and then maybe play another half position up here if the market does go back up. So there's heaps of ways you can carve it. It's all money management, guys. So yeah, so that's one I wanted to show you because I was kind of like. Scared that if you did plan to take the trade, and you place your stops really tight, you're going to find that you might not even take target 1 and 2 on the cipher. You might just keep waiting for it, and all of a sudden the market comes back up, hits your stops, and then I get blamed for it. So I just wanted to show you that. It just came up last minute, and so yeah, that's about it. Best of luck, and I'll talk to you soon. Cheers, bye.